Canada just saw a near 30% drop in temporary residence. So if you rent or you own or you plan to buy a home, this is going to change things more than any Bank of Canada rate cut. In October alone, temporary resident applications fell by almost 30% year over year. India, always being one of the bigger sources, dropped significantly, while on the other hand, Ukraine's percentage surged massively. This really tells us who's leaving the country and who's replacing them. This isn't just an immigration story, it's actually a housing story, and it's going to quietly reshape rental pressure in the country, buyer competition, and mortgage decisions heading into this year. But first, before anything, let's take a look at the numbers, because in October of last year, Canada processed 365,000 temporary resident applications, which is up a tiny bit from September, but a massive 28% lower than October of 2024. And if we look at year-to-date numbers through to October, we were at 4 million applications, which was down about 21% from last year, which marks one of the weakest Octobers since, you guessed it, the pandemic. 2021 outside that pandemic border closure time. But the shifts by countries are pretty crazy. India has always been one of the top sources for students and workers, a massive source of immigration into Canada. They dropped almost 30% year to date with just over 1 million applications. Meanwhile, on the other hand, Ukraine immigrants surged by almost 230%, but the number obviously being much smaller. We've got about 240,000 applications there. Likely, we know what that's due to. Other big sources like China and Nigeria saw declines of over 10%. But you know and I know that this is not random. It's actually part of our government's push to try and throttle immigration, and we know why. But in a report to Parliament on immigration, it showed that Canada issued 1.6 million temporary permits in 2024. But our plans are to cut that to 385,000 this year. And that change marks about a 43% drop just from targets in 2025. You know why this is happening, but in Canada, we are sick of seeing a strain on housing, on healthcare, and on our overall economy. But let's connect this back to housing. And what's interesting is just how closely population growth and housing pressure have tracked over the last few years in this country. Temporary residents or non-permanent residents, they include students, foreign workers, and visitors. Their numbers exploded from 1.4 million in early 2022 to almost doubling to over 3 million in the first quarter of 2025. This group of people, it's obvious, but they're not really home buyers, right? They have a very limited role in home ownership, and they own far fewer properties than permanent residents. Instead, what they do is they fuel rental demand, which has an effect on your house price. If you think about it, students, they attempt to cram as many people as possible into an apartment, whereas workers, temporary workers, they need accommodation where they can find jobs. So this pushes rents sky high in those cities, which indirectly boosts home price as investors look to buy up some of those properties specifically to service that rental demand. It's not obvious, but rapid immigration has been a massive driver for the Canadian housing crisis in the last few years, with graphs from various studies showing a very clear correlation. As immigration goes up, housing starts from our construction just cannot keep up, which leads to shortages, and shortages lead to price surges. Economists note that dialing back on immigration is already starting to see a little bit of a cooling effect with demand. On the rent growth side, we are expected to only see about a 2% annual change this year. But with plunges in applications, especially from high volume countries like India, we are probably going to see far less pressure on big markets like Toronto and Vancouver, whereas Ukraine immigration might add more housing demand in few specific places, but overall this shift means fewer people coming for work and for school, which tends to mean less competition for rentals. But from a mortgage perspective, this is actually a big deal because lower demand is likely to steady or even soften home prices this year, which could make it easier for you if you're a first-time homebuyer to finally get into the market. And if rents happen to cool, well, what that does, it frees you up for more savings, invest more, build your down payment. So that would be a win for you in affordability. However, it is not all good news. If the population growth slows too much, it can actually slow the economy with economic growth. Immigrants, they don't just need housing, they work, they spend money, and they support local businesses. Fewer people coming in mean less overall economic momentum for the country. Right now, housing markets are starting to stabilize as interest rates ease, but there is a very clear trade-off. If demand drops by too much, builders are probably going to slow down or even cancel some projects, which limits new supply and can undo some of the progress that we've made on affordability. It's also important to remember that many temporary residents, they aren't just leaving, they're actually becoming permanent residents. This is a big push from our government. As that happens, some of these renters eventually do turn into buyers, which can help keep housing demand steady, keep it from falling too sharply. And you do care about that if you are a seller and you want to protect your equity or your valuation. And if rates do continue to come down, mortgages should and will become more accessible to you, but buyers definitely need to pay attention to policy changes, because if immigration stays tighter, inventory will continue to build, and that could give you as a buyer more leverage, more choice, more negotiating power, and fewer rushed decisions as we've been used to. Buyers need to pay attention to policy changes. If immigration stays tight, inventory could continue to build, and that is going to give you as a buyer more leverage, more choice, more negotiating power with fewer rushed decisions like we've been used to in the last 5-10 years. Long term in Canada, Canada has a supply problem. We know that we are short millions of units, millions of homes. This slowdown in immigration can give our system a little bit of breathing room, but it doesn't solve the underlying issue. If population growth picks up again before supply can catch up, prices are likely going to rebound quickly. As a broker, what I would say is if you are eyeing a home this year, 2026 could be a suitable window before there is any reversal. So, what do you actually do with this information? Well, if you are renting, the big takeaway here is that rent pressure is likely to ease. That gives you breathing room, time for you to clean up your credit, build some savings, and really put your financial picture together. If you are looking to buy, pay attention to where demand is coming from. Markets that rely heavily on international students and foreign workers are going to cool faster than others, especially compared to smaller cities, more locally driven markets. And if you do own rental property, I know this one sucks, but this is a reminder to be realistic. Vacancy risk is a real thing and it could rise in certain areas. So think about diversification and think about cash flow more than ever. Ultimately, this immigration shift isn't going to show up in headlines all over the place. Where I think you will see it is in rents in your market. It's in listings in your market and buyer leverage over the next year. So if you are planning a move in 2026, I think this is one of the trends worth paying attention to, because by the time this trend is too obvious, the window of opportunity for you has typically closed, but not always the case. Anyways, thanks for watching. If this video was helpful, do me a favor, consider subscribing. Hit the like button on this video, that helps me too, and I'll see you in the next one.